Well, good day, smart traders. I trust each and every one of you are ready for another profitable day within the market. Let's kick things off by having a look at today's economic calendar.
This week's economic calendar definitely has its fair share of economic events. So let's kick things off in Europe. On Tuesday, the flash PMI data for February, which will show how well the economy is performing after unexpectedly growing in the final quarter of 2022. If improving business conditions and contributing to rising prices pressure, this could bolster expectations for the European Central Bank to keep rising interest rates given persistently high inflation. Now let's move over to the US. On Wednesday, the Fed is set to publish the minutes of its January meeting when it scaled back the pace of interest rate hikes to 25 basis points after a year of larger increases. Since then, data has shown the decline in the annual rate of inflation that has stalled while producer prices rose by the most in 7 months in January. Together with a strong US NFP report for January, the data has prompted traders to re-evaluate expectations for how high the Fed will ultimately rise rates. They now see the federal fund rate peaking above 5.2% in July, according to interest rate futures. The minutes may give investors some insight into the appetite for a larger rate hike by the Fed in the upcoming meeting in March, after recent comments from some policymakers indicated support for such a move. Additionally, the US is set to release personal income and spending data on Friday, which contains the Fed's favorite inflation gauge, the Core Personal Consumption Expenditure Price Index. The economic calendar also includes updates on both new and existing home sales for January, along with revised data on fourth quarter gross domestic product and the weekly report on initial jobless claims.
Let's move on by having a look at what's making headlines within the financial markets today.
In currency news, the euro managed a small gain against the dollar on Friday in a desperate attempt to find its footing after weeks of selling, but some see the reprieve as another opportunity to load on bearish bets. The bears are sharpening their claws against the euro as the dollar feasts on hawkish bets. Now let's look at our analysis for Euro USD for the coming week. Here we can see that Euro USD is currently trading in a descending channel. We could see a rebound back up to our resistance level at 1.074. Should this resistance level hold up, we could see a sell back down to the bottom of the channel at 1.06. Analysts also predict that should this support level be broken, we could see a further sell-off down to 1.035. Now let's move over and see what's making headlines on Wall Street. Last week, data showed an acceleration in US consumer prices in January, putting pressure on the benchmark S&P 500. However, following a 19.4% decline in 2022, the index is up nearly 8% for the year to date, helped by better than expected earning releases and a resurgence in growth stocks. Speaking of earnings, as the earnings season is coming to an end, results from major retailers will give an insight into the strength of consumer spending amid soaring prices, a critical topic for traders. Walmart, the world's largest retailer by sales, along with home improvement giant Home Depot, are set to report on Tuesday and will set the stage for everyone else, according to JP Morgan retail analysts. Now let's move over and look at our analysis for the S&P 500. It's currently hovering just below that resistance at 4,100. Should this resistance hold up, we could see a potential sell back down to our primary support level at that 4,000 flat level. A break of the 4,100 resistance could see the bulls taking charge and aim for that 4,200 resistance level. Now let's move over to commodities. Crude oil declined 4.2% for the week. There has been a considerable psychological resistance at the $80 a barrel level. And the latest snapshot of the US supply released on Wednesday, we saw a rise of 16.3 million barrels, way more than expected. This is the highest level since June 2021. It appears that the world economy is slowing down, but markets continue to swing depending on the question on whether China is reopening or not, and this always helps to boost crude oil demand. Now let's have a quick look at our analysis for crude oil. Should the resistance level at $77 a barrel hold up, we could see a potential sell down back to that support level at $72 a barrel. However, should this resistance level be broken, we could see a buy back up to that psychological level at $80 a barrel, and then maybe potentially even higher to that $82 a barrel level. The dollar index rose 0.9% last week, which has ultimately put a dent in gold's demand. Falling out of favor and sliding into a bearish trend, gold prices hit a fresh monthly low at $1,818 per ounce, having declined 2.5% for the week and is down nearly 5.5% for the month. Now let's finish things off by having a look at our analysis for gold. Gold could potentially see a rebound back to that primary resistance at $1,850 an ounce, which then could spark a sell back down to that $1,820 support level. However, should this resistance level be broken, we could see a potential buy back up to that 1,880 level.
So that is it from us here at Smart Online Trader. Should you be interested in any additional services that we offer, kindly get in touch with us or simply click on one of the links in the description below. As always, may the force be with you. Cheers.